Good morning, good morning, good morning, everyone. Come on in the room. We want to welcome you in on this morning. You know, it is Saturday, a little after 9 a.m. Eastern Standard Time Zone, and you are here live with Coach Steele, myself, and you are here on Coach Steele's Finance Training. We are happy to have you on this morning, Coach Steele's Finance Training on today. It is February the 1st, and we are getting ready to kick off February with another great interview on Coach Steele's Finance Training. If you haven't already, make sure you go subscribe to the YouTube channel at Coach Steele's Finance Training. And as you jump in the room, you already know as a team, we tell each other good morning. And before I can even give you all instructions, some of you are already doing that. Jumping in here, good morning to you, Mr. Reggie Castile. Good morning to you, Mr. Tony Sherman. As you all come in the room, you are going to notice that there is someone else in here besides me. And I'm excited about this on today because we have a lot to talk about in Coach Steele's Finance Training. We like talking about financial literacy, all things financial literacy, educating people. And during this season, because most people will be doing taxes in the next few months, I want to talk about taxes and talk about the financial literacy of that. You all know we talk about entrepreneurship as well. And so this is a great conversation that we are going to have on today because my special guest today is Kim Hampton. So where you are, everyone, just go ahead and in your own house, just give a round of applause for my special guest. We won't be able to hear your hand clapping, but I feel it. And good morning to you as well, Anitra, and everyone as you all jump in today. I want you all to get your notes ready, get a pen and a pad, and be ready to write some things down as we talk to Kim Hampton about taxes on today. And in a few seconds, I'm going to allow her to introduce herself. Once again, if you are on Facebook, make sure you are following my Facebook page. And if you have tax questions, get ready to ask those questions, drop them in the chat. And when the time is appropriate, we will deal with them as well. If you're on Facebook, you already know, go ahead and share this live stream with other people. And if you are up this morning cooking breakfast, go ahead and continue to cook your breakfast. Just turn us up a little bit. If you're cleaning, that's fine. Throw us in the Bluetooth in your ear and keep on cleaning. If you got the vacuum cleaner on, turn it up a little bit. But ladies and gentlemen, once again, we have Kim Hampton with us on today. And Kim, thank you for joining Coach Steele's Finance Training on today. I appreciate the fact that you took up this offer, this opportunity to come help us out. And before we get started and dive into taxes, can you tell us who Kim Hampton is and kind of what you currently do right now?
Good morning, everybody. Thank you. Thank you so much for having me, Coach Steele. This is just really an honor and a privilege. Even though once I start talking, you guys know that taxes is a love for my finances, period. So my name's Kim Hampton. I'm originally from Cleveland, Ohio. Right now I'm residing in my work home. I call Maryland my work home and Cleveland's my retirement home. So pretty soon I'll be retiring and going back home to Cleveland. So, but I work for the Department of Defense in Maryland, in Aberdeen, and I also do taxes. Oh, that's all. I'm a business major. I majored in business. I graduated from Texas A&M. I'm a logistician. That's my daytime job with the Army. I'm a logistician, so I do everything logistics for the Army. Anything they need, we provide. So that's where and then also, like I say, I'm a business major. So that's also part of why I like to do taxes and finances, because I learned a lot in business. But I'm going to tell you guys, when you go to college, they're going to teach you what they want you to know to run their businesses, not to run your own business. So I had to learn a lot on the side, even after getting a degree in business. So that's how I am.
Well, it sounds like you're pretty busy. You have a lot going on. That's pretty interesting when you talk about logistics and stuff like that. That's what makes the world go around. When you really look at the grand scheme of things, getting things from one place to another, whether it's locally or whether it's internationally, we need logistics everywhere. And so when we talk about taxes on today, and for you personally, and I know you have the background in business as far as your education, but what got you into taxes, studying taxes, and wanting to help other people with their taxes?
Well, when I thought back about that question, my aunt worked for the IRS when I was young, and I used to always be at her house, and she also did taxes. So I was just amazed, and she did my taxes. But once I went to Germany, I had to do my own taxes, and so I had to learn about taxes. And then once I learned, it was like I liked it. I picked it up, and I really, liked it. So I would, have all kind of books, tax books, and it's just interesting, and then once I got into business, there's a big difference. There's things that we don't know, and we didn't know. So that just opened up my mind a little more for teaching and assisting, people with their taxes.
What had you, if you're from Cleveland, Ohio, what had you in Germany? Like what positioned you to be in Germany?
My husband was in the military, so he was a
Got
soldier.
it.
So I traveled
Okay.
all over the world, and I did taxes for people there too. So it was like, people that didn't know, So yes, so I actually, when I think about it, I've probably been doing taxes for 30 plus years.
So you've done taxes internationally.
Yes, because when you work in Germany and you're from the US, your taxes is a little different. Mine was a little different because not all of us, but I worked under the Berlin Tariff Agreement. So I made marks. I made German money. So
Mm,
yeah, I got paid in German money. Yeah. So it
interesting.
was different. Yes, it was. Let me very much so.
So your aunt, it's funny because now it's like your aunt, you saw your aunt do it, now you do it. And so she was the inspiration, part of that inspiration and driving force behind it. When you said when you got into business, you started noticing things or catching things as taxes, are you able to dive deeper into some of the things you started learning that kind of piqued your interest?
Yeah, well, the business side of the taxes. Okay. So like I guess my econ, which is part of my other business, is really what did it because we have expenses that like a lot of people that have businesses don't get to utilize. A lot of people tell you, oh no, you can't use that, you can't use this, So people don't, but you can. The IRS has a whole section on common business taxes for people with businesses, and it gives you a whole list of things that you're eligible to use once you have your own business. And a lot of people think that it has to be an LLC. You don't have to have an LLC. That means a limited liability company. And so if your company, if what you do in your business, you think that you'll be sued for, okay, by all means get an LLC. Otherwise, your social security is your business. You're a sole proprietor and you
Yeah.
can use your social. And a lot of people don't know that also. They think they have to have an LLC. They don't unless what they do fits in there. Okay. And then even with that, even like our people we call gigs. So the gig jobs are Uber and Lyft, DoorDash, things like that. And they don't get a W-2, they get a 1099. But what they also get, which a lot of them don't understand, is you're using your vehicle. So you
Mm,
get right off your vehicle. And with my tax clients, I have them give me too much information so I can use it to the benefit of them. So I'll ask, okay, if you have an older car, especially, let me know if you had any major repairs. So I want all your major repairs. I want all the receipts for your major repairs. I want you tracking your mileage because I want your mileage over the years, mileage has gone up. I remember when it was 30 something cents a mile, 33.5. It's 58 cents a mile. That
mm.
means that when you get in your car and you use it for your business, you're getting back 58 cents for each mile that you drive for your business. So I learned things and I teach things. Like I tell you, if you have a business, you get in your car, it's a business trip. Every time you get in your car, you're going to do business. You better have some business cards or a flyer. I don't care if you go to the grocery store. The first thing you're going to do before you start shopping, you're going to put up that business card or that flyer because this becomes a business trip. So that's what I like to teach. That's why it kind of got me. And then once I got clients and they didn't know, then I like teaching. And then, then they spread it. They spread my name. My son gave me a slogan. you need help with your taxes, you better call Kim, because I'm the one, and I take time. See, sometimes people don't take time. And when you go to it, like a lot of people, I'm not a CPA. I am a certified professional tax preparer by the IRS. My name is also listed in their book, so that people looking for a tax preparer can look for people. They have a book listed with names in your area, and my name's in there. So, and like I say, I try to really assist people, and I teach the whole time. And somebody can call me that's not my tax client and ask a question, and I'm going to answer. I'm going to help them, because whoever's doing their taxes, I want them to get the best person that they can get. And people love when they say they have a CPA. I'm not, like I said, I'm not a CPA. CPAs are so busy getting your stuff done. If you don't tell them and give them exactly what you tell them to do, what you do, and you look at it after they do it, they're not going to write off all your stuff. They were like, oh no, that don't count. Well, it's not up to them to say whether that counts or not. It's up to them to do what you give them. You know what I'm saying? If you give them miles, do your miles, So that's important. All I want people to understand is whoever's doing their taxes, make sure that they're doing their due diligence for you. And the onus is on the taxpayer, not the tax preparer. So always check your taxes to make sure that it's okay, because IRS going to go after you, not the person that prepared them.
That's so true. And it's good that you talk about the business side of it, because some people, when you talk about sole proprietorship or whether someone has an LLC, some people will say, well, I'm not ready to start a business because I don't have an LLC and I haven't gone to the website and set it up. And they don't realize you don't necessarily have to have that. And what we would both say, and what Kim and I would both agree right now, is do your research. A lot of things that we're going to say on today, take your time. Do your own research, do your homework, so you can see what we are saying and if it applies to you in your current situation. So always go back and do your homework on the information that you get. And so when you do have a business, whether it's an LLC, whether it's an S Corp, C Corp, sole proprietorship, it opens up a whole nother layer of tax benefits and rules that can work to your advantage. And so a lot of you, take time to think about that. Kim, what would you say to someone who is saying, well, I have a business and I'm investing in it, I'm working in it, but I'm not making money right now, and this is my first or second year starting off? Would you still tell them that they need to keep up with information even though they're not making money in their business?
Yes. So as long as, this is in the IRS.gov, as long as you are working your business, then you don't always make a profit. And sometimes you put a lot of money in your business and you don't get anything out of it, but it'll come around. It takes years and years before you really see a profit. So as long as they call it a hobby or a business, as long as you show that this is a business and you're working it, and those expenses that you're claiming are for your business, then you're good to go. And that's when I say that, our best tool is documentation. So like we have what we call the cash flow manager. And that is that 99% audit proof sheet. I had a client that's also in my econ, and she had the cash flow manager, but she didn't utilize it. And we had all these miles and all her stuff done because I did her taxes. Well, the IRS said, because like I say, the onus is on you. The IRS came back and they said, you got to prove to me that you used this for your business, right? And so we hustled, and I helped her. We filled out that cash flow manager, and it took us weeks now because we had to recreate all of those miles and all those places she says she went. We had to recreate, but we was able to do it because she already had the tool. Because Mike kind of gives you, but she wasn't utilizing it. That tool, that cash flow manager, takes pictures. So you upload your receipts right in there. You take a picture of that receipt, then you put the who, what, and where. As long as you have all that documented, hey, it took months for us to do it. Then it took them months before they said okay and gave her refund. I mean, she's a testimony. She is a testimony that is important. As long as you have honest of what you do. But I went to such and such, and I met a client there, or prospect, because it doesn't have to be somebody that just does it, but you're going to be talking to people. So you just have to document. That is the most important thing. And you have to keep up with it, because what we call it is leaving money on the table. So because your mind, I mean, especially, we do so much. We multitask and we'll forget, oh, where was I 3 days ago? What was I doing? So when it comes to your business, just make sure you document. You can save money and you can get money. That's the key. And on that note, when you have a regular job and you have a business, that's what we do. We shift our income. So the first thing we learn is shifting our income. So how do we shift our income? So for my regular job, I redid my W-4 because I didn't need Uncle Sam to have all my money every pay, because I was going to get it at the end. So I need to give him less, because the government allows me to write all this stuff off and get a refund. And so when I say refund, like, people get excited right now because they can get a refund. But all you did was let Uncle Sam hold on to your money all year and refund it back to you. So they making money off of our money unless we're doing our W-4s correctly and just paying just the right amount of taxes. And if you don't get a refund, that means that you had your money all year to take care of your lifestyle, to take care of your daily needs. Okay. But if you got a business and you still have your money all year, you're going to get a refund, because you're going to lower your AGI, your adjusted gross income, And we just had a conversation the other day with some friends of mine at work, like I do, same grade I am, right? And I had a stimulus check back, right? I got every one of them, $600, $1,200, $1,400. And they're like, how you get a stimulus? Because very few people that's at my level got a stimulus. I said, because I got a business. So I can write off thousands of dollars, which dropped my AGI to under where it needed to be for me to qualify for the stimulus check. See, so having a business really helps you throughout your life, throughout your life, to grow financially. So we teach financial empowerment. When your finances is in order, it empowers you to do more and be more for yourself and your family. Because we also talk about generational wealth. We got to leave something to our grandkids.
Definitely. And that's powerful information, because what you're saying is some people are paying too much to the IRS and basically giving them a free loan, interest-free loans. And there are ways that you can learn how to adjust how much you're giving, so you don't have to wait to get your money back later, when that's money you could have been currently using to make your lifestyle more comfortable, or investing more into, just think about this. If someone is overpaying Uncle Sam, and that's money that they could have been sitting into their retirement account or investing into their business, over a period of 20 to 30 years, that money not working to your benefit, making a profit with compound interest, it is really costing you thousands and thousands of dollars. That may determine whether or not you retire a year or two early. So that's pretty interesting when you think about it from that point of view. When it comes to taxes, Kim, what do you think the average person, like some of their hurdles are, or some of the patterns you see where people make mistakes when it comes to taxes?
Well, right now, I have 2 new clients, and I did 4 years of taxes for them. I did 20, 21, 22, and 23. And they're getting
My goodness, hold on, wait, say that again. You did what?
I did 20, 21, 22, and 23. 4 years. 4 years. I just finished them. I just mailed them their 20 and 21. Why did I have to mail them their 20 and 21? Because it couldn't be done electronically. So the IRS has a lot of stipulations now. So I can only electronically file taxes 3 years back. So yes, 3 years back. Okay. And also my 2 clients that had 2020 taxes, both of them had a refund coming. One over 8,000 and one over 6. But guess what? They forfeited that money. The IRS has enacted a new rule. It hasn't been but a couple of years, and if people don't really realize, they've enacted a new rule. They can only get refunds from 21, 22, and 23. And also listen, we're on 24 now. By July, if you don't do your 21s, you're going to forfeit that money. A lot of people don't realize this. Oh, what?
So these people could have had, in 2020, they had a return of about potentially $6,000 to $8,000.
Both of them. Yeah, one of them had six, one of them had 8, and one of them had 6. Yes.
And now they can't get it.
They can't get it, but they still had to file taxes. That doesn't. You still have to file taxes for those years. You have to file. So I still had to file their taxes. We sent it in. They're going to send it in because they have to sign it and send it certified mail. And it'll take the IRS months and months to open those up, because the IRS is far as that's why they keep pushing electronic file, because it takes them forever to open up tax returns to do them. Because they don't have the staff for it. They're getting better, but they don't. So something happened during COVID and people just stopped. They just stopped. But I'm trying to wake everybody up. I'm trying to wake them up and say, hey, don't do that, because you hurt yourself. With that, you just hurt yourself. You know what I'm saying? So yeah. So and the IRS are sending, because as you have listed, if you've heard, the IRS is sending out stimulus checks. So those stimulus checks is for people like I just filed for, that didn't file in 20 and was entitled to money, but because they didn't file their taxes, they didn't get their stimulus checks. So IRS is sending out $1,200 stimulus checks to those that didn't file that year. And so yes, so that's where people are. But then the other thing that I want people to know is, number one, remember that 3-year rule and just get your taxes done. Find somebody to do your taxes. It's not always bad news. But another thing, because of our economy, a lot of my tax clients, especially last year, they're paying hardly no taxes. The one thing I want everybody out here to know, you are not exempt. Nothing about you and your lifestyle makes you exempt. Everybody has to pay taxes. A lot of people put exempt on there. And IRS did change what you can do with W-4s. So many people were not paying taxes that for 3 years, the IRS redid the W-4. They just kept redoing it because people put themselves as exempt. So at one time, you can put up to 10 exemptions, which I did because I had a business. So I didn't have to pay all those taxes. So I had all these exemptions. And what happened with me is I was wrong. I didn't learn. I didn't know everything. I knew that I didn't owe the IRS. So I always did everybody else's taxes and mine was last, right? So I had to do 3 years of my own taxes. And I had just did them. I finally did mine. I said, okay, let me take time and do my own taxes, right? But I knew I was getting a refund. So if you don't owe, April 15th doesn't mean anything to you, okay? If you don't owe. If they give you money back, and because I hadn't filed my first one in 3 years, I got some money back. I got some interest. But guess what? I was like excited. But what you don't know, you don't know. Then the next day, after I got my interest check, right, I got a letter from the IRS saying, "Hey, this is income. Make sure you put it in your taxes." So I didn't get anything. The interest became income, right? So it's like whatever. So. But what happened is they stopped my exemptions. My check kept being smaller and smaller. I'm like, what's going on with my check? So I finally got in touch with DFAS, which was my payment people with the Department of Defense. And they finally figured it out. And they said the IRS had froze. They had froze the W-4s exemptions for thousands and thousands of people because nobody was paying taxes. So they couldn't tell, since I hadn't filed for 3 years, whether I owed or not. And so they wanted their money, right? And so when I finally got somebody at the IRS, got a nice gentleman, older gentleman, he says, "Oh, Ms. Hampton," I said, "I see what's going on." Then he said, "Oh," he said, "but in the meantime," he said, "you filed." I said, "Yes." So it had crossed. And so he says, "I'll lift it." So he had to lift that exemption, right, from my check. And because I was getting a refund, but it took months. So I had a lower check for a long time, because I had a higher check because I had a business, so even after that, they've changed that W-4 so many times, and I've even had to write them myself because they made an error in one of their changes. And because I do W-4s and I know how to do it, and I take people through doing W-4s. We have a class on doing W-4s on how to change it, because you want to come even. And if you got a business, you can come even with the IRS and then get a refund. And you're not getting your money back. You're getting what they allow you to have to do business.
This is so good. because on Coach Steele's finance training, we have so many people that are in that dual situation, Kim. Some of them have, small businesses, their own business, whether it's sole proprietorship or LLC, and then some of them still work regular 9 to 5 jobs, so they're W-2. And so a lot of what you're talking about will be able to help a lot of people that are tuning in and understanding how they can adjust their W-4 for their 9 to 5 job based on their business and what they have going on there. And if you all are just tuning in and jumping in, this is Coach Steele's Finance Training. Make sure you subscribe to Coach Steele's Finance Training on YouTube. And we have Kim Hampton here talking about taxes with us on today. So make sure if you do have some basic tax questions, some questions that you do have in regards to taxes or in this field that we're discussing here today, put it in the comment section on Facebook, or if you're on the YouTube channel, put it in the chat section and I'll read it off and we'll see if we can help you all out today. We have Tony Sherman tuning in and he says, education is key to financial literacy. Yes, that is correct. Tony Sherman is one of our listeners, Kim. He is retired, but he has real estate as well. And of course, we know real estate can be a very good tax shelter. So if you're just jumping in once again, we have Kim with us today talking about taxes. So make sure you throw your questions in the comment section as you're listening. For some people, Kim, what are some tax tips, some positive tax tips that people can do, whether it's something simple or some of the things they can do to prep for taxes? They haven't done their taxes yet, but what are some tips or some guides that you can give them to help them?
Well, before you do your taxes, before you give your taxes to your tax preparer, make sure you have all your W-2s. Any 1099s, people take money from their 401k, so all your 1099s, 1099Rs, because you have to file those. One thing that people mistake it is that they forget this. So make sure you just have a folder and keep it all year and just start sticking your stuff in there. Stick your stuff that you get to have to do taxes. You need your 1098s. So your 1098s is your mortgage interest. So if you have a house, you own a house, then you're paying interest. So it's important to have that interest, because if you're in different tax brackets, I feel that the person that files single is in the best tax bracket that has a business if they're single. I mean, because they're only, the numbers went up, your deductions went up. So single or married filing separately, last year was $13,850 standard deduction. This year is $14,600. So that's an increase of $750. So that helps you with your standard deduction. But if you're married or head of household, it's already over $20,000. So not necessarily do itemizing work, but I get everything for my clients. So if you're single and you itemize, your mortgage can count, your tithes can count, so keep up with that. Any charitable giving. So at the end of the year, towards the end of the year, even now, start cleaning the closet, giving things away that you're not using, but keep those slips. Okay, you write up what you think they're worth, right? So along with that, you also have, like I say, your mortgage interest goes on there, your taxes, your real estate taxes can go on there, your tithes, your charitable givings, but also medical. People seem to kind of forget about that. Don't forget about medical. Eyeglasses count. You can put that on there. Your contacts go on there. If you hurt yourself and you need crutches, that go on there. Your mileage, if you have to drive 30 miles to the doctor, your mileage counts on there. You can do your mileage. Prescriptions.
I didn't know that.
Oh yes, 31 cents a mile. Might have raised 31 cents last year a mile. Because some people have to drive a little far for their medical. So those miles count. And just keep all your stuff. Prescriptions. Some people have a lot of prescriptions. That goes on there. Co-pays go on there. So premiums that you're paying go on there. So keep up with that stuff. Just keep up with that stuff. Don't think it doesn't count, because it does, because you get, if you're single or married filing separate, you're getting $14,600. Well, some people may give $15,000 to their church. They might pay $15,000. So already you're top that $14,600. And then put some charitable stuff you gave to the Salvation Army, Red Cross, and a lot of a lot of catastrophes this year. People are giving. People are donating to the Red Cross. Don't forget those donations. Any 501c that you're giving to, keep up with it, okay? And like I say, the medical stuff you forget about already. So if you gave $15,000 to your charity, to your church, already you're getting more than the 14.6, okay? So then you add that other stuff in there, you could be up to 20,000. That's gonna drop your AGI. So already you've saved $5,000 that you wouldn't have if you didn't keep up with that stuff.
Very good point, Kim. I remember when I found out I could put medical expenses and things that I paid for subscriptions on there. I was going to Kroger because I found out they can print off for the year how much you spent. So I was going to the doctor's office, Kroger, whoever, CVS. If I forgot where I spent money and asking them for a log of the money I spent, and they gave me those documents that I needed, because like you mentioned, which is important, to itemize that stuff. Now, if you're married, filing jointly, now it increased so much that you have to have a lot of itemized deductions to get over that number. I don't know specifically what it is, but whatever that number is, you have to have so much. Otherwise, you might as well just do the standard deductions. And so that's why it's important that if your church or those organizations that are 501c3 that you give to, ladies and gentlemen, if they don't mail that stuff off to you or have a platform where you can print it off or get that information, you may have to reach out to those organizations to get your documents, to get your information. So that's a good tip. And most mortgage companies will be mailing that 1098 to you. But if somehow you forget or you didn't find it in the mailbox, go online to your mortgage where you pay your mortgage and print off that 1098 in that document section as well for your taxes. So those are definitely some good tax tips along the way to help people out. And some of that stuff, I didn't even know that the mileage that you use to go to those appointments could be written off as well, because sometimes people have to drive pretty far. They may have to go to a whole nother city. And we do have one question, Mr. Reggie Castile. He says, what if you're medically retired? Do you have to pay taxes? And I think he's talking about like through the VA military.
Well, it depends on what your so if you're 100%, if you get 100%, then no, you don't pay taxes on that money. If your disability is 100%, you don't pay taxes on that money. You don't even give your tax person that paperwork. That's yours. Once you hit 100%, there's no taxes on that money.
Yeah. So because with VA, that money, any VA medical disability, any disability money from the VA, they don't even tax it at all. So you shouldn't be paying taxes on that at all. It's not taxable. And so, but you can give it to me, Reggie, if you want to, and I'll tax you. So when we continue to deal with taxes on today, guys, we are live here, Coach Steele's Finance Training. Make sure you share this live feed on Facebook, or if you're on YouTube, you can share it on your platforms as well. And we're talking with Kim about taxes on today. This is what we call tax season. But one thing you mentioned, Kim, was for you, it is always tax season. And when you say it's always tax season for you, what do you mean by that?
I do taxes all year. Like I was telling you, I had two people with 4 years of taxes, but I don't know what COVID did, but it just made people stop doing stuff, and sometimes they just don't do it. I don't know if it's fear, and I'm very passionate about my clients, and once they talk to me, it's like, oh my God, I'm okay. I feel okay. I'm in your hands. They feel comfortable. They're like, okay, I can get this done. We can do this, because each of them are individuals, and I treat them as individuals, and they're important, and once they realize that, then that fear, whatever that fear was, it goes away. And a lot of them, like I was saying, being exempt, a lot of them weren't making it. So I had one tax client say, Ms. Kim, I just need to make sure I got enough to pay my bills. So I don't want no additional nothing. I'm only want so much taxes taken out my check because I have to meet my bills every month. So that's why a lot of people they was exempt or had less coming out because they needed to make it. They weren't making it, and they need to make sure that they check was enough to pay their bills. But then what we ran into, when I've run into a lot, is that now they're owing the tax. They owe IRS a lot of money. IRS is sending out letters left and right. That's what I'm getting a lot of calls too. Because they're getting letters, and that's why tax season lasts all year, because they're getting letters even before tax season started, and they're saying, I need help. I gotta do this. I just showed someone, I went online with someone, a new client, and showed them just how to go online and set up a payment plan, because he said, I got a letter, I gotta get this payment plan done. I gotta do my taxes these other years, but I gotta get this payment plan because they'll block you. IRS will stop you from getting your driver's license. Okay? They will stop you from getting a driver's license. Yes, they will put a block on you. And that's how I get a lot of customers too, because we're like, I can't get my driver's license. I got to do these taxes from whatever year that is, right? So they're into everything right now, and so like a lot of people owe a lot of money because they didn't have hardly any taxes taken out of their check. And they'd be like, I say, you made X amount of dollars, this many thousands of dollars, and you paid under $1,000 in taxes all year. I said, we got to fix this. I said, we got to make it whereas you can survive and you will owe them so much. Because guys, you have to remember something. Not only do you get a penalty for late filing, but you get interest daily. Interest on the money you owe. And then just go on a payment plan. If you just can afford, sometimes they'll take $50 a month. It may take you forever to pay it, but you're paying something. And then you work with somebody like myself or anybody else or your tax person, and you make it whereas you get everything that you can get back. So once you get a refund, the IRS going to take that, and it's okay. They're going to subtract it from what you owe. So that's going to drop you down some more. So don't be late filing. Let's file, so we can get some money back. And let's get a small business. Let's get something where, you might see something that you like to do, that you can do and make it a business. And then you get, what? We're talking like, I'm doing this now. This is part of my business. So what I'm using? We're using the Wi-Fi. We're using my computer.
Talk about it.
People using their cell phones. I'm in this nice chair, right? This is a business write-off. IRS paid for this chair. IRS paid for this computer. Hey,
the space in the room that you're using?
Yes. So I get to write off my space that I'm using for my business, which means that whether I rent or have a mortgage, then part of that goes in it. So what I do for my clients, I'll look up their address, I'll get the square footage, I'll talk to them, say, okay, describe to me what you're using. The footage. I put it on there, and a portion, it could be 30%, 40%, 20%, it doesn't matter. A portion of it counts for your utilities, your Wi-Fi, your cell phone. Now, my cell phone, every time I'm on the phone, I'm talking my econ, I'm talking taxes. So Uncle Sam paid for my cell phone, everything. My Bluetooth, I use that. Okay. My adapters, my cords, all of that. People forget about theirs. My mouse for my computer. Hey, guys, we're leaving money on the table. Those of you that's listening that have a business or are going to play this later, quit leaving money on the table. It's yours because you earned it. So keyboard. You need a keyboard. Just pay attention. Take notes. And one thing, don't forget anything. The IRS will fine you $10,000. So a lot of people